Folks, time's flying. Good morning, trade pros. Welcome to the morning market update for Friday, October 5th of 2018. This is George Papazov from TRADEPRO Academy. Just getting adjusted here in my seat, getting comfortable. I think I'm good now. Today is non-farm payrolls day, and it was a huge and welcome opportunity and a burst of volatility in a short span of time. We traded with our elite group, and I'm just repeating myself, but you guys haven't heard it yet on YouTube. We traded in the elite group, and we had a really good chance. We caught a real good opportunity for 10-handle move, and we read the market very well on this data. So I'm going to bring you up to speed on what happened. Some of our members have already done their daily goal and gone for the day. On non-farm payrolls, that's what you want to do. You want to go in early. You want to hit non-farm payrolls, and you want to be home before 9:30 a.m. All right, you want to be done for the day before the day starts for 90% of people. That's the goal on non-farm payrolls. You don't want to be in there getting chopped up and messing around with this thing till 4 p.m. close. You really don't. And then Monday as well. The Monday after non-farm payrolls tends to be a slower day. So today you really have to take advantage of the opportunity in front of you. All right, so let's talk about this. First and foremost, let's talk about markets. A tour around the world. Japan's down 0.6%. Hong Kong's down 0.2. China closed. India down 2.3%. Bearish across the board in Asian markets. In Europe at midday, London's down 0.6. Paris down 0.4%. So too is Frankfurt. Actually, Frankfurt's down 0.6%. Bearish momentum from Asian markets spilling into the European session and carrying through into the U.S. as well. For the most part, before non-farm payrolls, Dow and S&P were flat. NASDAQ was down 0.1%. Now all three are trading slightly lower. Vic, are we above the open again on yesterday's open, Nazi? No. All right, that's fine. So we're still to the downside. So what happened today was that we had the release of the non-farm payrolls. This is the private jobs number that comes out once a month. Usually, I mean like 95% of the time, usually, it's the first Friday of the month. Sometimes it's the second Friday, and that depends on where the 12th of the month prior falls on the calendar. It's really a long-winded explanation. You don't want to hear it's boring. So essentially, on the first Friday of the month, we look at the latest jobs numbers for the previous month. In October, on October 5th, which is today, we're looking at September's jobs numbers. We had an expectation in September for 185,000 jobs added across the Wall Street. Analysts, economists, that's the kind of the median term projection for it. 185,000 jobs added in the month of September. All right. Well, what ended up happening is it came out at 134,000 jobs. So we missed by 51,000 jobs. And some of this will no doubt be attributed to Hurricane Florence. I'm sure if anybody's looking for a reason for jobs to miss, it's nice to point to Florence and say, Florence did it. But it may not be, all right? It was just a miss. However, look at this. The revision from last month, and that was August, went up by 70,000 jobs, okay? So let's do the math, simple math. We missed by 50,000. We revised the prior month higher by 70,000. What are we at? Net 20. Make sense? Net 20. So you add the 20 to that 134. Hang on a second. We got to 134. It's not net 20. We got the 134,000, and we add the 70,000 back month revisions, 204 versus 185. Now we have a beat. All right, we have a beat of these numbers, and that's a bullish overall look at the jobs numbers. Bearish headline, but overall, the back month revision made up for this month's jobs that were lost. All right, there's a whole slew of other data underneath that number. Let's leave it there for the sake of this report and the brevity of getting through this market update. But the next thing that we saw was the September unemployment rate. All right, this was projected to drop from 3.9 to 3.8%. Non-farm payrolls are a three-tier number. Everyone gets caught up in the headline number of how many jobs, but that is just 1/3 of the picture. The other 2/3 are equally important, and that's what causes people to lose a lot of money and trade this thing without any direction. Most people trade non-farm payrolls like a chicken with their head cut off, running around freaking out, wondering what to do. It's all in the numbers. Just got to break them down properly. Second part of 3 is the unemployment rate. That unemployment rate dropped to 3.7% from 3.9. It's projected to come out at 3.8, which means super bullish development. This is the lowest unemployment in the United States of America since 1969. All right. Let that sink in for a little bit. That's wildly bullish. So it doesn't matter what the headline non-farm payrolls number did. That's a bullish number on that fact alone. All right, makes sense. Underemployment rate went up to 7.5%. Change in household employment went up as well. Number of unemployed people dropped to 5.96 versus 6.234. And civilian labor force participation rate stayed at the same level. Very bullish on that aspect. Now let's talk about the third point of this. So let's sum it up. Jobs number missed. We didn't add as many jobs as expected. We did still add jobs. The prior month of August was revised higher, and that offset the miss of this month. Unemployment rate at not record low, lowest since 1969. All right. And now the third thing is this: average hourly earnings. So this report is about how many jobs are added, right? How many people are employed, and what is the quality of the jobs added? How much are they getting paid on an hourly basis? Let's be honest. If you had to take a job to pay your bills, you would take a lower paying job with less satisfaction. It's not your dream job. You got to pay the bills. That's what average hourly earnings talks about. Average hourly earnings came out at 0.3% as expected, and on an annualized basis, 2.8% year over year as expected. So there have been no increases in hourly wages. So wage growth did not increase. All right. The primary headline number missed. Back month revision offset it. And the unemployment rate hitting record low is what really set the bullish tone. So if it wasn't for that unemployment rate, it'd be sort of a bearish report. It'd be a mixed numbers report. This is a mixed report with a bullish sentiment to it. So what did that do to markets? Strong jobs numbers means strong market, right? Yes, in the past. What about the future? A stock market does not like to see that, because not when the Fed's hiking. The Fed sees this report and they say, all right, we got the fuel to continue to hike. We didn't get a wage increase, but it's consistent. They're still making the same money. We didn't really get new jobs numbers, but the back month was revised higher. And to be honest with you, we're getting into seasonal employment. Numbers are going to look great. What do you do if you're the Fed? They keep raising, keep hiking rates. Let's hike more while we got the chance. That's what the stock market didn't like. And it sold off, and that was the opportunity. A strong non-farm employment report is downside for equities these days. If you don't know that, you got to follow and pay closer attention to what the Fed's been doing and what they're looking for. U.S. dollar went up on that news because it's a stronger report. The dollar liked it. U.S. dollar up. Other currencies down against it. Euro, GBP, you could have sold anything against the dollar except the yen. The yen's a strong one because of inverse correlation. Also, gold went down temporarily. Then it kind of was a little more seesaw and choppy. Bond yields went up, and the dollar went up. So since then, let me just turn around and see. What have we done since then, Victoria? Pretty much nothing. We pretty much got to, we're still below the non-farm payrolls number, but we've recouped a lot of the losses. So sell off to the downside very fast on volatility, rally back up and recoup. Now wait for the U.S. Open. And I think that we're going to start to hit these highs and bring this price lower. I think we're going to get a low close for the week. You're going to know if that's true by 10:30. 10:30, if market stops dropping and starts going up and you start to see volume on the upside, we're not going to close low. This thing's going to rip. So it's going to be a fight today. Being honest with you, I can tell you this, and I'll tell you to be cautious. And no matter what bias you have, you might be wrong. In fact, I think you could be long and short today and end up being red. So be very careful. There's going to be volatility to end this week. And the morning sell rallies, when the European markets close, look to reverse and maybe buy dips for the early part and see if you catch some momentum. That's all I'm going to tell you. At the end of the day, it's all real time. Can't tell you 5 hours ahead. Can't even tell you 10 seconds from now where the market's going to be. Nobody can. Even the market doesn't know that. It's a real-time instrument. So if you guys want real-time updates, come to the trading room. We're going to be trading from now till 11 a.m. I wish you guys a great weekend. Thank you for being here. It's been a great week for us. We're closing out a green week. I mean, in the absence of making a disastrous mistake today, we've had a good 4 days of green, and today we're going to close our green as well. Thank you guys so much for being here. Have yourself a great weekend. To our Canadian friends, happy Thanksgiving. Monday's a holiday in Canada. We will still be working. I'll be here. And yeah, happy Thanksgiving, team, and everybody else. Thank you for being here. We appreciate you guys. Good luck, good trading, manage your risk. Trade the TRADEPRO. Let me turn around, open the trading room. Take care. Bye. All right, Trade Pros. So we've had some opportunity and momentum, but it ain't over yet. We're just getting started. The market hasn't even opened for today, for the U.S. market. If you're green money like Len gets the opportunity of going to the bar so early that it might not even be open. Len, is the bar open where you are? Probably not. So if you made your profit target, great. If not, we still got to work for it. And let's talk about a few levels we could set up here for you to have a nice high probability, low risk trade to start the session. All right, so let's start out with S&P 500.